Hello and welcome back to the show. Haha, Today, we are strapping in to take a very close look at the latest earnings report from SpiceJet. This one is quite a journey with some major turbulence and some surprisingly clear skies.
That's a good way to put it. SpiceJet Limited, one of India's major low-cost airlines, has a lot going on. They also have a significant logistics arm, Spice Express, which plays a big role in their story. This report is going to be a fascinating mix of good news and some serious red flags.
All right, so we are looking at their audited standalone and consolidated financial results for the fourth quarter and the full financial year that ended on March 31st, 2025. The company's board approved these results on June 13th, 2025. Let's start with the headline numbers. What's the top-line revenue looking like?
Okay, let's break it down starting with the consolidated results. For the fourth quarter of FY25, their revenue from operations came in at 1,465.56 crore rupees. Now, comparing that year over year, it's actually down from 1,738.39 crore rupees in the same quarter last year.
A drop in revenue year over year. What about the quarter-over-quarter comparison? How did they do compared to the previous quarter?
Good question. Quarter over quarter, there's a positive story. Revenue was up from 1,237.04 crore rupees in the third quarter, showing some sequential growth momentum heading into the end of the year.
Interesting. A sequential improvement, but a yearly decline. Let's move to profitability. The press release was buzzing about a record profit. What do the audited numbers say about profit after tax or PAT?
Right. The headlines were definitely positive. On a consolidated basis, if we look at total comprehensive income, which includes PAT and other items, they posted a profit of 336.12 crore rupees for the fourth quarter. This is a massive improvement from the profit of 127.42 crore rupees in the same quarter last year.
Wow, that's a significant jump. So what's the story quarter over quarter on the profit front?
Sequentially, it's just as impressive. The profit of 336.12 crore rupees in Q4 is a huge leap from the 21.43 crore rupees they made in Q3. This really highlights that the final quarter was exceptionally strong for them in terms of profitability. For the full year, they posted a total comprehensive income of 52.62 crore rupees, which is a remarkable turnaround from the loss of 418.3 8 crore rupees in the previous fiscal year.
That is a massive turnaround for the full year. What about the standalone results? Do they tell a similar story?
They do. On a standalone basis, the total comprehensive income for Q4 was 318.60 crore rupees. For the full year, it was a profit of 47.77 crore rupees, swinging from a loss of over 400 crore rupees last year. So both at the company and group level, the profitability picture has dramatically improved, especially in the final quarter.
Let's talk about operational profitability. The press release mentioned a strong EBITDA. What figures do we have?
The press release for Q4 FY25 highlights a consolidated EBITDA of 527 crore rupees, which is a strong jump from the 209 crore rupees in the third quarter. This indicates that the core operations became much more profitable as the year closed out. The improved profitability, despite a year-over-year revenue dip, seems to be driven by a significant other income component and perhaps better cost controls or operational efficiencies.
You mentioned other income. How significant was that?
Very significant. On a standalone basis, other income for the year was 1,452.15 crore rupees. A note in the report, specifically note 16, reveals that a huge chunk of this, over 538 crore rupees, is a gain from restructuring lease obligations. Similarly, Note 5 mentions a gain of over 522 crore rupees from a settlement with another large lessor. So these are not purely operational gains. They are one-time gains from settlements and restructuring, which have massively boosted the bottom line.
So that's the story behind the huge profit numbers. It's less about selling more tickets and more about negotiating better terms on their massive liabilities. Were there any exceptional items reported?
Interestingly, no. Despite these huge gains, they've been classified under other income rather than exceptional items. This makes the headline profit look like it's from regular operations, but the notes tell the real story. It's clean in one sense, but you have to read the fine print.
Let's look at the balance sheet. The press release talks about a positive net worth. What's the situation there?
This is a critical point. After a long time, SpiceJet's standalone net worth has turned positive to the tune of 683 crore rupees as of March 31st, 2025. This is a major milestone and is primarily due to significant fundraising activities, which we should definitely talk about. However, on a consolidated basis, the net worth is still deeply negative at minus 1,944.39 crore rupees.
A positive standalone net worth, but a deeply negative consolidated one. That's a huge divergence. What about cash flow?
The cash flow statement is revealing. For the full year, on a standalone basis, cash used in operations was a massive 1,665.07 crore rupees. They survived because of financing activities, where they raised over 2,100 crore rupees from issuing new shares and warrants. This clearly shows that operations are still burning cash, and the company is dependent on external funding to stay afloat.
So they are raising money to fund their cash negative operations. Let's get into the segments. How did the main airline business compare to the freight and logistics arm?
The segment information in the consolidated report is very insightful. For the full year, the air transport services segment brought in revenue of about 5,136 crore rupees and had a profit of 58 crore rupees. In contrast, the freighter and logistics services segment had revenues of just 187 crore rupees but a profit of 10 crore rupees. The air transport business is a massive, low-margin operation, while the logistics arm appears to be smaller but more profitable on a relative basis.
Now for the most critical part of any report like this. What did the auditors say? I see the auditor is Walker Chandiok and Company, LLP.
And this is where the story takes a very serious turn. The auditors have issued a qualified opinion on both the standalone and consolidated financial results.
A qualified opinion? That's a significant red flag. What was the reason?
The qualification is due to non-compliance with a host of laws and regulations. Note 13 in the standalone report lists delays in depositing TDS, Provident Fund, and GST. It also notes the failure to reappoint a Chief Financial Officer or CFO within the stipulated time. The auditors state that because the potential fines and penalties for these non-compliances are presently unascertainable, they cannot comment on the adjustments that might be needed in the financial statements. This is a major uncertainty hanging over the company.
That's not all, is it? I see a section on material uncertainty related to going concern.
Yes, and it's just as serious. The auditors draw attention to the fact that the company has accumulated losses of over 7,700 crore rupees, and its current liabilities exceed its current assets by over 3,800 crore on a standalone basis. These conditions cast significant doubt on the company's ability to continue as a going concern. Management believes they can manage thanks to fundraising and operational improvements, but the auditors are required to flag this as a major risk.
Any other major points from the auditor?
Yes, there's also an emphasis of matter. This relates to the ongoing litigation with the airline's erstwhile promoters Kalanithi Maran and KL Airways. The outcome of this long-running legal battle is uncertain, and the auditors are highlighting it so investors are aware. Essentially, while the P&L shows a profit, the auditor's report is flashing multiple warning lights about legal issues, regulatory non-compliance, and the fundamental ability of the company to continue its operations without continued financial support.
So, to summarize, we have a company that's showing a dramatic, headline-grabbing profit for the quarter and the year. But this profit is largely driven by one-time gains from restructuring and settlements, not core operations, which are still burning cash.
Exactly. And while they've managed to turn their standalone net worth positive through massive fundraising, the consolidated company is still deep in the red. And all of this is overshadowed by a qualified opinion from the auditors, a going concern uncertainty, and major litigation risk.
So, what's the outlook here for an investor? It feels like a very high-risk, high-reward situation.
Disclaimer: we strongly advise all investors to check with certified financial experts before making any investment decisions. This is a classic turnaround story with immense risks. The positive case is that they have raised significant capital, are settling with lessors, and are trying to get their grounded fleet back in the air, which could improve operational performance. The bull case is that they've survived the worst and are on the path to recovery.
And the risks?
The risks are profound. The auditor's qualification is a major issue. The potential for large, unquantified penalties is real. The going concern note means their survival is not guaranteed and depends on their ability to keep raising funds and turn operations profitable. And the ongoing legal case with the former promoters could result in a significant financial liability. It's a very speculative situation.
It's a very complex picture. On one hand, a profit after 7 years is a huge achievement. On the other, the foundational issues flagged by the auditors can't be ignored. Thanks for breaking that down for us. It's clear that with SpiceJet, you have to read well past the headlines.
You absolutely do. The notes to the accounts and the auditor's report are more important than ever here. For those watching on YouTube, remember to like, share, and subscribe for more deep dives into financial reports.